Welcome to Markets Now. I'm Michelle Rourke with Brad Kooima of Kooima Kooima Varilek, and we are seeing a lot of red on the board with the exception of soybeans this morning. Brad, let's talk about the cattle market first of all. Obviously a little setback initially here, but is this a break that's going to be bought like all the other ones, you think?
Well, the trend is your friend, right?
Right.
Thanks for having me on, Michelle. That would be my instinct. I didn't see anything, about the cattle on feed report that would make me change my mind. In fact, just to highlight a little bit, while the numbers were largely neutral compared to the pre-guess estimates, this on-feed number, if I look at the last 10 years, it is the lowest if I look at the placement number the last 10 years, it's the lowest placement number in the last 10 years, with the exception of the 2020 COVID year. If you remember April in 2020, we were in the heart of it, right? So other than that year, we compared to a really small number last year, and we came in even smaller. So that side of the market continues to, provide some encouragement, I think. And then if you throw that on top of the latest developments with the Mexican border, that looks like, now the word is indefinite closing. Everybody understanding the need to really, really tighten the security down to make sure that it doesn't get across the border, which I think they'll get done. It seems to me like they're finally being real proactive about doing that. So the combination of that too is going to slow the imports, particularly for a state like Texas, which has struggled this whole year so far to get their placements done. So that, and then by the way, the cash market was pretty decent in the north, especially. Right. With highs as high as 231 paid last week. So still trading a big discount. That ought to be a little bit of a draw, one would think.
Just to follow up on the cattle on feed report, as we said, largely neutral. It did show, one, that we do have tight numbers. As you said, it confirmed that. It also showed the migration of more cattle up to the north. That's where most of the placements were over a year ago, right?
100%. If you look at the Nebraska placements were 100, Iowa was 98 versus like a state like Texas, which was 94. If you look at the total on-feed numbers, the only two states that have more cattle than a year ago are Nebraska and Iowa. Nebraska at 102, Iowa at 103, and then Texas comes limping in at 94%. Some of this is probably, due to the border being closed, but this pattern was going on long before that. I think that there is a little bit of a migration of cattle toward where the packing houses are, toward where the cheap feed source is, toward where we negotiate actually for cattle. And by the way, we're getting a premium. Notice that, like $10, $11 premium to the south up here in the north. So, I guess I'm glad to see the cattle moving up here to the north, and I don't know that anything's going to change with that anytime soon.
Let's talk about the cash. Follow up there. You mentioned the record cash trade, especially in the north. Do you think we'll be higher again this week? And who leads, the north or the south?
Well, let's see if we don't do a little bit of a teeter-totter there. I found it very curious. Other than less than 1,000 cattle, a few hundred cattle that traded to a couple of regional packers, the trade in the south was, I would say, really most accurately stated as being a no trade, right, with bids that didn't get much above 220, and the feedlot being very resistant to take that. I mean, we got 230, 231 here. I got to think that those feedlot managers are going to say, we don't have to be $10 behind the north. So I think a couple things are going to happen. I think the trade in the south will be earlier in the week, and I think it'll be higher. I think that I don't think anybody in the north is going to, think that they have to ask for less. So I could easily see a situation where the north is 1 to 2 higher, and maybe the south is more like 3 to 5 higher as they try to catch up just a little bit. So I know everything's a little lower here today, but it's Monday and it's half an hour into the trade. It seems to me like the news is still supportive generally to the whole situation.
Right. Let me ask you once again, what are you watching technically to negate the bearish key reversals? What numbers are we watching? Or did we do some healing last week of the technicals?
Well, we improved the conditions for sure, but to really do it, we got to take out the old highs. There's two of the markets that I think a guy needs to watch pretty carefully. August cattle, where the bulk of the open interest is, right? Today's action, we got past 50%, we got past 62% of the last breaks, which tells you we're still in that, we haven't violated any major uptrend lines. But to really feel good about it, I'd sure like to see us go ahead and tackle that 214.50 area. I think we will. The other market that I think has got a good technical window here to watch pretty carefully are the August feeders, where that had a big sell-off, gap lower, rallied just far enough at the end of the week last week to fill the gap, and now we're seeing this retreat here 100 points off of that level. So I think August feeders need to probably close someplace above like 301, 10, 12, someplace in there. Then you'd feel a little bit better about the feeder action too. So yeah, market that's gone a long ways, Michelle. Big rally, huge rally. You're going to get violent corrections as well. So yeah, be diligent. You know, I keep encouraging the producers here to make sure you've got your puts bought. My tendency is to want to stay friendly, but have enough puts in place here that you don't let 2015 happen to you again.
Gotcha. A little early pressure in the hogs. Besides the futures premium to the index, I'm struggling to figure out what's driving that market.
Join the club. The hogs is nothing's easy to trade, but the hogs to me would be very, very difficult. We've had some convergence where we're a little closer to the cash. We've carried such a premium for so long. Now we're within a couple dollars. I don't know. You know, the short-term fundamentals, it feels like it's a tick better. You got the cutout above 100 for the first time since the Dead Sea was still sick, it seems. I continue to hear, we're up in Northwest Iowa where you can't swing a dead cat without hitting a hog building. I mean, they're everywhere. And the story we get here from some of the producers around here is that they're struggling again to source feeder pigs because of what's been another big outbreak of this PED. And it just seems like this go around, they're just not getting better from it. So, maybe there's a little bit of a supply side long-term hope out there, but of course you can't mention hog analysis without talking about the uncertainty created by tariff talk. But I don't know, in the short term, maybe we can crawl back out of here. I guess that's my inclination to think in the short term, maybe we can get a little relief. Speaking
of tariff talk, the EU tariffs, the 50% threat kind of tanked the grain markets on Friday. President says he's going to delay those now, but yet you have corn and wheat lower. So that's all about weather.
Non-threatening weather, I think, is what's happening. Yeah, the S&P got a little rally out of the EU story, but it doesn't seem like anything else did.
No.
The non-threatening weather, and let's be realistic, I think the weather has improved the wheat country a lot, not just domestically, but other places. Wheat sharply lower never is a good situation for corn. The bean story is, maybe it's a little easier to pitch a friendly bean story here, although, we're in the Western Corn Belt here, so it's difficult sometimes for me to even tell if it's really raining here and I live here. I mean, you know what I mean? I mean, whether it's because you're going to trade the next forecast, right? The old story would be to buy it when it's raining and sell it when it's not. I mean, that's the way it usually works. But if the Eastern Corn Belt, and I have no reason to think that they are indeed wet and late, that's a situation where that's actually not really friendly beans at all. But bean oil, if the bean oil can handle it, the beans will still stabilize. Otherwise, I'm a little worried that the corn thing is going to struggle. Now, I would say that though, it's May 27. We had this April high made in the corn. It would be really unusual if we didn't take out that April high in June, but it's going to take some weather threats, but you know how that can go. We can flip a switch and go from wet to too hot and dry in a moment. So we'll see. We'll probably threaten this crop once or twice yet before this is all said and done.
Yeah, and I think the funds actually went a little shorter in the corn market last week, which is a little interesting, isn't it?
Down here in the hole, it sure feels to me like it's, but you're talking about algorithms and funds that don't know anything about, real fundamentals. So
right.
Hopefully we can get the market to turn enough to get them out. Maybe that's what gives us that punch here going into the 4th of July. That would give us an opportunity. That 4th of July weekend is going to be interesting this year, because that also happens to time out right with a 90-day wait for Canada, Mexico. So that should be a wild first 10 days of July, I would expect.
Yeah, it could be some fireworks other than just for the holiday.
Good one.
Right. Thanks so much, Brad Kooima with Kooima Kooima Varilek, and that is Markets Now.